we can start. The agenda is pretty packed, so I'm hoping there will be some room for questions later on at the end. But we will look at what the three line of defense framework is. We'll dive into what the first line of defense, what are their accountabilities, what they do, as well as second line and third line. We're going to talk about some common problems. We're going to talk about 3 common problems that have been identified or seen since the implementation of the 3 line of defense for different entities and different companies. We're going to talk about some of the best practices. There's always room for improvement. So we're going to talk about how technology helps this framework excel and have more robust controls. We're going to talk about continuous monitoring, how continuous monitoring as part of the third line of defense creates a great vision or communication exercise with the first line and second line to ensure that any current and emerging risks are monitored, are reviewed, and they're observed before any regulator or any external reviewer comes into a corporation. We're going to talk about center of excellence and how an internal audit, these type of centers of excellence, can help provide consistency and help with the adequate establishment of a strong 3 line of defense framework. So before I start, I just want to make sure, is there any questions at this point, or we can start with the presentation? If not, we can start. So one of the most important things to talk about and to understand about the 3 lines of defense is that it's divided into the different roles that are applicable within an institution. You may have, like it's on the slide, customer facing, back office, you do the management of day-to-day risks, you're in charge of the development or the deployment of policies and procedures, you're in charge of ensuring that there's effectiveness testing, both the design effectiveness as well as the operational effectiveness. So there's different roles that are key to the well-functioning, the governance structure of an entity, being if you're casino, a money service business, payment processor, a fintech, or a bank. There's obviously different roles that are established within that corporation, and depending on the complexity, the risk appetite, as well as the jurisdictions where that company operates, the third line of defense will be obviously something that's more intricate in some it will be less complex, but there's always the ability to implement this framework or this model and the different functions that apply, and ensuring that there's a good level understanding of what the goals are for this framework is what the important thing is, because I think that's where the common problems come. That's where the common problems arise. So I'm going to show you as an example this video, just a short video, and then we'll go from there.
I'm reporting from outside Susceptible Holdings, which today announced bankruptcy following weeks of system outages caused by a computer virus called Doomslammer.
Where was the negligent behavior at Susceptible Holdings?
We had too much complexity in our systems and were not prepared for the sophistication of Doomslammer, but our behavior was not negligent. It was typical.
You were sent a letter by your regulator dated March 20th, 2019 that pointed out the vulnerabilities. Did you ignore it?
All of our peers had the same vulnerabilities. We did all we could. Losses during the 8 weeks our systems were down depleted our capital base.
What was the difference between Fortress Brothers and those banks that failed? Tracy, this letter is right. We have major weaknesses in our defenses. It's a question of when, not if, someone will breach them. We need the same challenge your risk team provides for financial risks. Ken is the CIO, and his area goes totally unchallenged.
Where do you want me to start, Mark? The first line doesn't share threats with us, and they resist our suggestions. There is no recognition by the board that risk needs resources and expertise to play this role.
I'm going to do my best to change that.
Allison is the Chief Resilience Officer at Fortress Brothers. She is responsible for preventing and recovering from threats, including malicious attacks, physical and digital. Allison is the second line of defense, and her remit is to mount an expert-led challenge on the first line, testing the first line controls and recovery plans with detailed simulated threats. For example, rebuilding the bank's critical infrastructure from scratch, pushing the first line to learn from their near misses, monitoring intelligence from the FS Alliance to jointly respond to systematic threats. 10 years ago, Allison's job barely existed in financial services, but headwinds created the perfect storm for the industry. Technology increased productivity, speed, and volumes, but left fewer employees for bank recovery. Sophisticated cyber weapons developed by the intelligence community were open sourced to criminals by a number of major leaks. Allison was hired to push the first line harder on defenses and recovery. The CIO was resistant at first, but soon saw its value.
In 2025, when the Doomslammer attack happened, Fortress Brothers' network was infected. The virus, adapted from a government cyber weapon, spread across the FS industry by exploiting a number of zero-day weaknesses. Fortunately, Allison had been given resources to embed advanced recovery capabilities and force the business to take them seriously. The bank's defenses stood firm. Susceptible Holdings wasn't prepared, and the virus caused massive damage. As weeks passed, nervous savers and clients started to lose faith. Eventually, the bank toppled.
Why were your defenses not fixed? Why was your outcome so much worse than Fortress Brothers?
So that was just an example of exactly where different attacks and different issues or gaps can come to the different institutions. So I just wanted to start with that video because I think it helps visualize exactly what we're going to be talking about in regards to what the 3 lines of defense model is or framework, and what does every specific line of business do, and what are the different accountability responsibilities, and also the issues that they face, because it's important to understand not only what the specific accountabilities are, but also what are the risks, what are the specific functions that they have to apply, second line and third line, and what are the other risks that first line has to mitigate, and the training that they need to take to ensure that the institution, be it any reporting entity, is covered, and there's a actionable communication between all the different lines, because that definitely helps. So when we talk about what the 3 lines of defense model, there's many definitions, many takes to it. What I understand from it is that basically it's just a risk governance framework. And basically what it does is it splits what the functions or responsibilities are across 3 different functions. As you can see on the slide, we have our first line, which is usually the customer facing, the functions that are always working with the client. So at a bank, that could be either your customer service representatives, branch staff, relationship managers, everyone from the frontline staff to operational management. And they are what we'd like to call in the 3 line of defense framework, they're the risk owners. There's systems, there's a control environment, as well as internal controls, and a specific culture of owning the specific, for banks, let's say it could be KYC, it could be different functions or pillars within the program of a institution that they need to be able to be the owners of that specific function. So they're crucial. They're the ones facing the client, So obviously they need to be well trained in what to ask, what to see. Second line has to obviously provide them with the tools, the policies, the procedures, the guidance, the advice and counsel to ensure that they know exactly what they're looking for, that they have lists of red flags, so that they can actually anticipate any risks, be them financial or non-financial. Second line provides oversight, and that's where you have, for example, a bank, you have your compliance or your second line function, which is reality just providing oversight, development of policies, procedures. If you have a institution that operates in many different jurisdictions, they'll be the ones that create or provide a challenge function of different internal controls, as well as a control environment for the first line, as well as testing of some of the functions that occur in first line. And so second line is very important. They have to make sure that they have line of sight and feedback, as well as comments about the systems, the tools, all the specific control environment activities that happen and that are accountable for the first line. And so they help identify and manage risks. They usually, in financial institutions, will have a very good relationship with regulators and with different industry partners to ensure that they understand what is happening in the industry, what are other institutions applying as controls or oversight for the different emerging risks, be them, as you've probably seen in the news in the past couple of months, be them sanctions, be there many different emerging risks that are happening, from cryptocurrency to the war, sanctions, and retrospective reviews, and obviously negative news that you will see in either news articles or using your systems, right? And then lastly comes the third line of defense. So this is usually where you would see internal audit. The internal audit function comes, and they provide independent level of assurance. So it's that independent review of what first line and second line does. And depending on how complex it is, some institutions will have a small internal audit function. Some of them will have a specific internal audit team that focuses on the different business lines. So if you have, let's say, a wealth unit, as well as a Canadian banking unit and international unit, you would have a specific team, for example, responsible to ensuring that there's sufficient audits and testing, as well as monitoring of the controls and all the different functions that first line and second line do. And third line, be an independent function, has a lot of responsibilities and has a very big responsibility in the sense of ensuring that the testing is accurate, it's consistent, it's aligned, whether you're doing a credit audit or you're doing a AML audit or any sort of financial and non-financial audit. You want to make sure that whenever there's a strong and mature third line of defense, that they have standardized DAPs, so that's the detailed audit procedures, and that they work with other teams nowadays, leveraging technology, leveraging data analytics teams, and ensuring that they have a opinion to give to the board of directors about what is the specific risks, what are the results of the audit, and what's trending well, what's trending not so well, and where does either more staff, enhancements in systems need to be incorporated. So in a little bit of a summary, that's what the third line of defense model is. There's obviously specific different nuisances to each one of these, but that's specifically the best summary that you can find. Obviously, as the tone from the top comes, there has to be participation from all the three lines of business, right? You have your risk owners, control functions, as well as your control testing environment, which is internal audit. And one of the important things to keep in mind is that all the employees must act within the risk appetite that the institution has. And that is extremely important because it promotes integrity, it promotes adherence to conduct risk, to the ethics statement that the institution have. And one of the things that is important to make sure that the three-line of defense framework is strong and robust in an institution is making sure that from the beginning, once it's communicated, it's understood that everyone is accountable for identifying risks, not just the first line. It's not the second line and third line. And if there is any risks, it's not about passing the buck to other function or other line of business. It's just understanding that as an entity, you need to make sure that you mitigate those risks. You summarize what the gaps are and you escalate any concerns when there is either a lack of internal controls that is, for example, found by second line testing, or third line testing sees that there is, for example, data gaps by the risk owners on the first line because there's not sufficient information being captured or obtained at the point of, let's say, onboarding a client or interacting with a client for whatever purpose of that entity is for the products and services. So we'll deep dive in what the line of defense accountabilities are. And one of the things that I've seen is in some of the more complex or bigger institutions, you will see a division in the line of business. You will have a 1A and you have a 1B. That's not always the case, but the 1A is in reality it's just a subdivision because 1B provides somewhat of a additional testing activities that help second line testing as well as third line testing have a line of sight of what's happening. But when we talk about first A or 1A, you're looking at the risk owners. They talk to the employees, they're talking to customers, and they're understanding what's happening. They're responsible for identifying and assessing and managing the day-to-day risks. So be them operational units that are talking to clients or operational units that are processing payments, are processing any client request, be them for wires, payments, or anything of that matter. And they need to obviously follow what the controls in place are and what the policies are. And it gets a little bit more complicated when you have an institution that operates in multiple jurisdictions, because you have to actually abide not just by where your head office is, be them in London, in the UK, or if it's in the United States, or if it's in Canada. You need to have a proper line of sight to understand what are the local requirements and regulations for your head office and how it cascades to the different jurisdictions where you operate. And so for this, first line is very important, because if you operate in different jurisdictions, like for example, Canada, US, and in Asia Pacific or in Latin America, you will have different regulators. You will have different requirements for capturing data. You will have sales practices that might be different record keeping requirements. Privacy legislation will be different. So you need to do a good understanding, and that's what the three lines of defense model helps. It helps understand what you need to do. And so the 1A in a nutshell are the executors of the internal controls. And so internal controls are one of those specific things that are, I work in internal controls for international banking. So we work a lot with the 1A to understand what are their products, what are their services, and then we advise and provide counsel on what those internal controls are to manage any inherent risks, any emergent risks, or any other risks that might have not been seen by the business. Although the business is the one that knows the products, knows their clients, there obviously helps to have the 1B assist them in monitoring as well as responding to risks. And so that's why the 1B in a lot of institutions is created as a key player to help the business units have a more precise look into what their risks are, what is the reporting requirements, and they help. They create a bridge between first line and second line, as 1B works very closely with second line to ensure that any initiatives, any risk management initiatives, any projects, any governance structures that are required to roll out a different product or some services or a specific campaign, they help analyze what are those initiatives, what are the requirements, and they create a bridge. So the 1B is very important in creating that communication with the second line. We will see second line also has a very important task, but besides creating that specific communication bridge between the business and the risk owners and second line, they also perform first line testing of controls. They help develop your risk assessment. They help develop what are the controls in place that you have for data capture. They can help automate certain controls, and then they will do that in communication with second line. So it's important because they will be part of the one first line of defense, but they will also help have that connection with second line. So what does second line do? Second line usually you will see as compliance officers and the different compliance individuals that help set the tone and set the policies, the procedures. They establish what the risk appetite is. If you're a financial institution, they're the ones that will help you, or they will decide and have ear to the ground, and will have very good relationships with the regulators, and they will decide any clients that you would wish to do business with. So they establish what the risk appetite is, what are the thresholds for transacting with the bulk of the clients. If you're dealing with individual clients, with corporate clients, with any sort of, so they're the ones that will develop the policies, and they will provide advice and counsel when there's requirements for interpretation of those policies and procedures. And that's important because they will, their job is to constantly maintain access to what the best practices are, talk about all the regulatory requirements, be prepared, and have within their planning, their annual planning, a view of which policies need to change. So, for example, in the AML field or industry, there's been a lot of regulatory changes in the past year and the past 2 years, and some of them are being implemented within last year and this year. So obviously second line has to have, in this specific framework, an understanding as to when the deadlines for these new requirements are, have enough staff to update those policies, make sure they're communicated and trickled down to the different units that require these updated policies, and also talk with the different jurisdictions. If you're trying to implement different changes in regulation that apply in Canada but don't apply in the United States, or let's say in Chile or Peru, then obviously you're going to have to do that coverage assessment. You're going to have to understand what the differences are, and if there's any exceptions that are required to, let's say, what would be a global policy, right? So it is important to understand that the role of second line is very it's very broad. It's not more important than the other lines of defense, but it is very very broad in the sense that you're looking at the different models. If you're looking at the client risk rating, if you're have transaction monitoring and other different functions for an institution, they're going to be key, and they will have to have subject matter experts to help them advise and understand regulatory requirements, put them in a policy, and then communicate it to the countries, to the different units and make sure that they're implemented as they should, and that there's testing. And that's the other function that is very important. Second line testing. Second line testing is very important because it works very similar to third line. It is not independent, obviously, because third line of defense is the independent reviewer, the independent assessor of the different controls. But they work very close with 1B and with the business to ensure that if there's any risks, they are mitigated and they're reviewed depending on the cycle. And they work together in developing. So the annual testing plan for second line has to be aligned, and it's very similar to what the third line annual plan should be. And that's where communication between the three lines of defense should be, because one of the common misconceptions or the redundancies that occur in this is the multiple testing or the subsequent duplication of reviews when there's no requirement to do so. As you can remember, 1B does some first line internal control testing, second line does some testing, and third line will do some testing. So you need to make sure that there's consistency and there's alignment between the testing that's involved, because obviously you don't want to go and create a negative experience for the business unit. The business units have a lot in their plate. They're dealing with the customers. They're trying to increase sales. They're trying to promote and have campaigns and do different many things. And obviously having multiple audits, multiple testing cycles creates a specific risk to them, and it is important. And this is one of the things that we will talk in the next couple slides. But third line definitely has to talk to second line in regards to that, because it's a different type of approach. The sampling sizes could be similar, but obviously third line of defense most usually in most institutions will not rely on second line testing. They will take it into consideration as well as 1B, but they're the ones that determine what their audit standards are, what they're going to review, and what are the cycles as well as the time period for the audit. So third line of defense usually has, depending on the complexity, different subject matter experts. You can have within the third line, you can have an internal audit, a team that does the credit audits, one of them that does the wealth management audits and focuses specifically on the control environment and all the design effectiveness and control effectiveness of the testing of that. You might have a specific group for the international offices or units. You might have a group that's specifically for anything that's related to lending. So there's a lot of different subgroups that could be in third line, but one of the most important things that third line of defense in a mature system should have is an audit professional practice, or the auditor of the auditors, which will help them ensure that there's standardized audit procedures. Even though the third line of defense tests different many controls, because you may be testing logical access and third-party vendors, and then you can be testing AML, or you can be testing any credit facilities. The testing is not going to be the same, but the work, the case management system, and how you execute an audit should be consistent, should be the same, and it should be aligned based on the risk that every one of those units do. So that's why third line of defense it's mostly focused on governance, framework, and control systems. They most importantly provide reasonable assurance to senior management within the business line, so which in first line, second line, as well as the different business units and the board, that the controls in place that have been identified and are captured in the policy and procedures are working as they should. And if there's anything that there's gaps or inconsistencies of what the policies are and what's actually being, what are the operationalization of that procedures, then they're going to highlight that, because they're the ones that are going to help senior management identify any flaws, any gaps, any self-identified issues that could be shared or would need to be shared if it's a voluntary disclosure with not just the regulators in one country, but regulators in different countries, as well as provide line of sight to the board to understand what's working well, what's not working well, where does more controls need to be implemented, where does more funding need to come, and where are the emerging risks, and what's your 1 to 2 year plan as to how to mitigate different transformations, or if there's a regulatory review, how to manage that. So with that said, that's the 3 lines of defense framework. It's very interesting, separation of duties, and in paper it works very, very well. But the communication and the establishing of the proper roles and responsibilities, identifying the knowledge base for every single line of business is something that is not easy. So I figured it'd be a good idea to talk about what are the common problems that you will find in the 3rd line of defense before we talk about the best practices, and also understand a little bit into each one of these common problems. We'll touch base into a couple of examples that you will find as to what worked well, what didn't work well, and what was all the different nuances that came, because there's obviously, we talked about the duplication of, there's more than 3 common problems, but I figured in the interest of time, we talk about some of them, but there's obviously, there could be, depending on how the tone of the top comms and how much communication happens between the 3 lines of defense, you'll see more than these 3 common problems. It's not here, but I've talked about it. The duplication of testing is something that is very problematic for institutions, and having communication and having those touch points between 3rd line, 2nd line, and 1st line to ensure that there's just a representative testing, and that you're not just testing just to complete a checklist. You're doing it to actually assess the risk based on the corporation's risk appetite and ensuring that there's proper controls. So the first common problem that I've seen, and that's been highlighted in many different things, is unclear roles and responsibilities. And this happened quite a lot when you're implementing this type of framework. It's very important, and I think this highlights the need for change management in nowadays business practices, and how important it is to provide communication that's clear and concise, and helps an organization adopt the different roles and responsibilities. They need to be cascaded down. An example of this is if 2nd line is implementing a new policy or standard or guidance, and it's just plastered in a website or a link for everyone to see, but there's no follow-up. There's no coordination with 1st line to ensure that this new standard or this new policy is being implemented. Well, there's going to be obviously not clear understanding of what are the roles and the responsibilities. So that has to be clear. The role of 2nd line, cascading information, the role of 1st line of assessing that new standard, seeing if it applies, and then adapting it to its day-to-day practices. If that requires a procedure change, or a procedure amendment, or an addendum to a policy, or if further testing is required, and what is the sustainability of this new standard being practiced, and how can you show, and if you have evidence that you've actually implemented a specific policy. So it's important, because if there is no clear understanding of what the roles are, then it's going to create a lot of confusion. And then what happens is accountability becomes a ball that is being sent from one side to the other, obviously trying not to showcase that the issue is within their line of business. And that's that mentality and that lack of clear clarity in what the accountabilities of each one of those business lines creates friction. third line is usually seen as, no one wants to see third line come in and do a review. But I think it is important for a common problem that happens from here is the tone from the top, and ensuring that it's communicated properly, that the role of the third line, for example, is it's not just to come and open issues and create more work for the first line or for the second line, but it's to identify and do an independent testing before a regulator, before an external reviewer comes, and then it becomes a much complicated and complex issue to solve. Because I think the testing that second line and third line do, when it's clear what the responsibilities are, they will create a line of sight to either a risk that was already known by the line of business, but also maybe an emerging risk that wasn't communicated or wasn't clear. So it is important. One of the examples that I have here for you is Sing Health. So in 2018, there was a cyber attack, and it basically compromised the personal information, PII information, for 1.5 million patients. And it was a very, very interesting case because there's a couple mistakes that happen. A middle manager in cybersecurity did not have the proper knowledge or clarity of the roles and responsibility of what a cybersecurity incident was, which obviously created a delay in understanding that there was actually an incident, that there was a breach. And there was also a secondary party that did not appear to show the appropriate concern. So like you saw in the different slides, second line is important because they will escalate any policies and procedures. But in cases like this, where there's unclear roles and responsibilities, that middle manager didn't really know what a cybersecurity incident was. When you think about it, maybe the second line of defense policies and procedures were not clear, or they weren't cascaded properly to that specific manager, who could be considered as a first line, and they didn't understand exactly what they needed to escalate. And that happens quite a bit, at financial institutions. One of the most important case, and we've seen it because we've obviously seen different banks being fined for this, is when first line has any specific training gaps and are not able to adequately or properly or timely identify unusual activity that needs to be further reviewed, and this becomes a suspicious transaction. And when a regulator comes and reviews your activity, the questions will arise as to, well, why wasn't this activity reported? This is clearly, if you look at the different red flags. So this speaks volumes about the communication of the policies. As you could see there, obviously, there's misconceptions as to what a cybersecurity incident is. If that's not clear in policies and procedures, and it hasn't been cascaded by second line, well, first line will have difficulties in understanding what they're supposed to see, what they're supposed to report. So having clear policies, having clear job descriptions, so that they understand what they're supposed to do. And it goes back to what I said, I believe, in the second slide, whereas all employees of a financial institution are responsible for risk management. And it's not just a responsibility of first line, it's a responsibility of all the different employees. So as you can see here, lack of adequate JDs, lack of understanding of what their role is, the possible lack of detailed policies and procedures created for a huge data breach, which obviously the Singapore privacy watchdog issued a very, very large fine for all the different companies that were associated in this. So it is important to keep in mind that this is something that if you implement 3 lines of defense and you ensure that there's adequate training, adequate policies, and one of the things that get reviewed by third line within their audits is the adequacy of job descriptions, because you need to ensure that your employees know what they're doing, as well as testing their knowledge. So this touches upon all the different 3 lines of defense. Second one is lack of knowledge. And lack of knowledge can come in many different forms. It can come by first line not implementing or communicating different standards or guidances, or focusing more on the business aspect and putting compliance controls as a secondary important function to maintain. So lack of knowledge could be something that in first line can become an issue. When a corporation goes on the news and they say that there was a lack of knowledge on the first line because many different branch staff or relationship managers were not aware of a certain policy, or were not aware there was a regulatory change and further data needed to be obtained from clients during the onboarding process. Well, that doesn't bode well. And when these cases make it to the news, it creates a reputational risk, which is something that could have been avoided if all 3 lines of defense talk to one another. Internal audit as the 3rd line of defense needs to ensure that they adequately test the knowledge and how they escalate risk. So it is important that 2nd line does that, 3rd line does it, but most importantly, the 1st line knows what are the risks and has not just once a year training, but constant training if things happen. One of the examples that I think that I could give is the Australian bank, Westpac. They had quite the couple of instances of issues with the regulator. There was a lot of anti-money laundering breaches, and obviously it resulted in a very large fine, as you could see there. But it stemmed from many different failures. Most importantly, what you can highlight, and I think some of these have seen, is that the risks were not understood. The red flags were not shared. There was not a tone from the top to ensure that the specific red flags and the different tools were there to identify this activity. And then also secondary to that was the lack of investing in specific control functions in the 2nd line. When you're dealing in a financial institution and you're dealing with a lot of transactions and you're dealing in multiple jurisdictions, you need to make sure that there's adequate capacity, staffing, and that there's enough funding for all the different control environments and the different groups. One of the things that didn't work well in Westpac was the fact that they didn't invest in AML department. And so they didn't provide proper training or accountability for the 1st line. And this is where the 3 line of defense framework has specific gaps when the emphasis is not coming from the top, saying that risk management is for everyone to do. 1st line is just not expected to open accounts and increase business. That's one of their accountabilities. The other accountability is to also, on the regulatory perspective, identify any risks, identify and report, because there's different reports that entities need to make, right? There's financial institutions, there's payment processors, there's cryptocurrency companies, there's casinos, and they need to be aware of what they need to escalate. They need to do SDRs, they need to do large cash transactions where they deal with electronic funds transfers. They need to understand how it works, how many reports constitute a filing one of those specific. When do you have to file a terrorist finance report? Like, there's so many different regulatory requirements, and the fact that this specific bank did not have proper resourcing, they did not have the proper department, obviously created and made this a huge reputational risk. The accountability was all put in the 1st line. but there wasn't any motivation on adhering to the compliance and to ensuring that regulatory requirements were met. It was more on business and creating more return on investment, right? So it can't be both. It has to be a good balance between, you know, long-term objectives of ensuring that there's increase in client portfolios and all of that, but also, you know, what this teaches you is that financial targets and risk controls have to come side by side. They can't be operating in different silos, because that's when problems happen. One of the other challenges that I see is natural conflict between first and second line. And second line having a more specific testing work. Sometimes you will see that one of the issues that come is that there's friction that occurs because second line will do testing, and then, you know, first line it's always wary about the testing that is being done by the second line. But, you know, it happens from time to time. And one of the things that I've noticed that creates best practices or de-escalates this natural friction is continuous monitoring and having an open channel of communication. One of the things at the beginning of any implementation of a framework is there's obviously lack of clarity what the rules and responsibilities are, and there will be scope creep, and sometimes second line will push and they will you know, try and tell first line what to do, and first line will obviously will not like that or will not want to do that. And it is important that for those situations there's open communication, and second line has to remember that, as well as third line, they're a challenge function. They establish what the policies and procedures are. What is the risk appetite? If the entity is going to deal with clients that are face-to-face, if there's sufficient controls that that corporation has. So all of those type of communications are needed to be had. And you know, one of the things that I've seen that helps is having senior management from all lines of business constantly talk about risk management, talk about what they see, what are the risks that are seeing first line. One of the best examples I've seen is during COVID, where all different institutions had to go to a more digital and a more online presence. If first line did not talk to second line to understand any gaps on face-to-face onboarding, or what third line expected the first line to do during this time. So there was a lot of conversations that could occur that can help have a consistent approach to dealing with specific external factors that are occurring, like COVID and many things. So, you know, and so communication and soliciting inputs from all the lines and making sure that everyone's considered equally is something that helps. The example that I found for where there was conflict between the first and second line was obviously with the Boeing 737 scandal. There was obviously, you know, huge impact to the reputation of this company that's considered to be one of the biggest in the industry. And so with crashes and, you know, the uncovering of culture or a tone from the top that did not value the experience, the knowledge, and feedback, well, obviously that's when first line are the key owners of the risk and they understand certain things. The mature three line of defense framework has to consider the feedback, the challenges, and the raising of the hands by first and second line. It can't just be second line dictating everything and then first line adapting it to their day-to-day processes, and then third line making sure that they're doing so. There needs to be some agreement, there needs to be concurrence, and so it is very important. I think in the next couple slides we're going to talk about these are the different change drivers that can create havoc in a three-line of defense. New policies, when there's significant changes in the policies, when there's commitments to the board, both financial and risk controls, it's hard because you need to manage those. There needs to be considerations by, can those financial targets be met considering the risks or the systems that are in place? What are the regulatory requirements? If there's changes in the regulatory requirements and certain regulators become more stringent than others, that's something that second line has to identify. They need to have different touch points with the regulators and bring that back to the first line. Not when the regulation is enacted, but during their multiple touch points, just to see how first line can adapt their operations to ensure that they abide and they are not in lack of compliance to a regulatory requirement. What are the different country focuses? So that comes with, having different jurisdictions. So all of these drivers create either cohesion or problems for three lines of defense, depending on the complexity, but also depending on how much these three lines of business talk to one another. When you have what I like to call continuous monitoring as a best practice, it helps. In my time in third line, we had in many different financial institutions that I worked, different touch points. And this was either by email, but mostly there was a formal monthly meeting between first line and third line, and then second line and third line, where we would ask them about what's keeping them from sleeping at night, what are the different challenges, what are their wins, what do they see is changing, what's trending in their world, what can third line do to help them. And so some of these best practices have definitely ensured that there's a robust understanding of all the challenges, and it's not going to be a surprise for either second line or third line if first line is starting to see different fraud risks occur because of synthetic identities being used during COVID. Like second line was aware of that, third line was aware of that. So some of the best practices that I've seen and learned, I think it's more important, and I'll just touch on this very quickly because I know that there's just a few minutes, but having tone from the top and visible support for change, leaders that commit to this framework to ensuring that everyone's treated equally, that risk management is the responsibility of everyone is important, and having a vision of what the organizational change is, ensuring that you have adequate resources and capacity, right? That you have a well-coordinated second line that is focused on risks, that has their eye on what the risk appetite is. If your second line has a risk appetite that's very risk adverse, or they're open to risk, but the first line is not actually comfortable, that's conversations that need to happen. So they need to be aligned. And obviously one of the things that I think, not just for the three lines of defense framework, but anything in a business, is understanding when and where to invest and have an open mind to change, because change is quick. Change happens. The only thing that we know for sure is that things are changing. Regulation changes, both in the compliance side, the privacy, in every sort of industry, there's always change. So it's good to have the right staff, the right systems, but also the right communication channels to ensure that people understand what their roles and responsibilities are. There's one of the things that I've seen is the adoption of technologies, to upgrade the model. There's obviously going to be common problems, but there's going to be enhancements. It's like anything. It's like enhancing your case management tools, your sanctions system, or your transaction monitoring side. You need to know when and what are all the data sources that you need to bring into the table, because nowadays data is the most important thing that a corporation has. And what you do with it and what you don't do with it is it's what helps create synergies between the lines of business. It creates efficiencies, and then it can help second line and third line do a more accurate testing, which is always great to provide any risks that can occur. And the other part, like we talked about systems, we talked about people, and when you talk about people, you need to understand that you need to have the right people in place of doing what you need to do. You need people who are experienced in regulatory and understanding what the regulatory ecosystem is, but also being able to put it in words that everyone in the company can understand it and apply it. Understanding that when you're having different lines of business, if you're talking to a retail client versus a corporate client, there might be a different type of training or a different type of information that you're going to provide. When you're talking about corresponding banking clients and you're talking just to normal retail clients, like the specific nuisances that come from, you know, a unit that deals with trade finance, a unit that deals with just credit cards, they're different types. So you need to have a second line that's able to help pass the information. That's where change management is so important. So they need to identify, they need to develop specific annual training, succession plans, and ensuring that testing of their knowledge, not just the first line, but also second line and third line, because we talked about the lack of knowledge and how first line sometimes does not. There's been instances, not all the time, where they don't understand what a cybersecurity incident is, but it also can be in second line or third line. If you have an auditor that doesn't really know what they're testing, that's going to be disastrous, because the results of that testing is going to not really provide senior management with the right information. And the same thing with second line. If the staff do not know exactly how detailed the policies and procedures have to be, that's going to create issues. So for me, those are the most important best practices to have. And one of the specific things that has helped institutions is the development of a center of excellence. Most importantly, in the internal audit sphere, you know, standardizing the structure, ensuring that everything is aligned, that there's coordination with technology. If you have data analytics, that there's a leverage of everything that they're doing, not just for the non-financial risk, but for the financial risk, and that there's robust testing, you know, talking and doing integrated audits. That has really been something that I've seen help foster a more robust three-line of defense framework and communication. As you can see, I'll leave you with the last slide, which talks about the roles and the objectives for what a center of excellence can be. But this can be applied not just for internal audit and for, you know, compliance risks. There's center of excellence for payments, or for credit. It can be applied to anything, and it will help create a more strong and well communicated structure in your company. So